Well, it's dot 5:15 by the studio clock, and we're here right on time to present to you the next panel for the day. However, before that, I must take a minute to acknowledge the support of our wonderful, wonderful sponsors for all their love and affection that they've given us throughout these months. Without them, TiECon Chandigarh 2021 wouldn't have been possible. So, in no particular sequence or order, I would like to thank our partner ISV. I would also like to acknowledge the contribution of our gold partner, GIZ India and Punjab Technical University. Our silver sponsors, STPI and Pioneer, and also our bronze partners, Hit Bullseye, Chitkara University, and NABARD. And I would also like to take the pleasure to thank our platinum sponsors, Government of Punjab and Startup Punjab. And now, ladies and gentlemen, diving into the next session. Well, it's a new dawn, it's a new day, it's a new life. And yes, I meant to refer to that song by Nina Simone. It's a lovely song, and the lyrics fit right in this situation because of technology, because the world downloads new updates every moment. Fintech. You know what they say, right? That banking is out and fintech is in. So let's now devote some moments to talking about Fintech Innovation 2021 and beyond. And to kick off the session, let me introduce our esteemed speakers on this panel. First up, we have Mr. Anuj Kakkar from MoneyTap, which is India's first app-based credit line. Next up, we have Ms. Meghna Suryakumar, founder and CEO of CrediWatch, a company that works with leading financial institutions, businesses, marketplaces, and platforms. And let me also take the pleasure of inviting on the dais, the virtual dais, Mr. Gaurav Sisodia, Director of Partnership and Business Development at Pioneer. And the session will be moderated by Mr. Kunal Nandwani, who's the co-founder and CEO of U-Trade Solutions, with varied experiences in technology, financial markets, and so on and so forth. Over to you, Kunal, sir, to take it forward.
Thanks, Niharika. Hi, guys. Welcome to the panel. I welcome all my fellow panelists, Gaurav, Anuj, and Meghna. So without further delay, I think it's worth maybe giving a brief further introduction about what you are doing, what your business is doing, so our audience can relate with it. So if you don't mind, may I ask Gaurav first to just give a brief introduction about yourself and your business that you're in for our audience, please?
Sure. First of all, thanks, Niharika and Kunal. Really appreciate it. Yeah. Happy to be here. I work for a company called as Pioneer. We help solve B2B payments, cross-border payments problem across the world. We've been there in the business for 15 years. Typically, we focus on two sides of the business. One is the enterprise side where, you name it, whether it's Facebook, Amazon, Walmart, Google, Wish, Lazada. We help some of these large enterprises to make payments across the globes. Millions of such transactions. You add a spice of compliance to it, becomes really, really complicated. And that's where we help these companies. On the other hand, which is like closer to heart, is where we help SMBs to collect payment in a seamless manner from a cross-border payment from the payers. So what we do is typically give you virtual collection accounts, ability to collect through debit card, credit card, and something which is called as an e-check globally. On that, we're trying to build more and more layers, whether it's lending, whether it's integration with invoicing platforms and plus. So that's the whole idea to be successful, to be able to solve some of the SMB problems is our motto in payments. I hope I'm not taking too long.
No, that's good. Thanks, Gaurav. Anuj, can you please go next?
Sure. Thank you so much for inviting me. ISB is your partner and it's my alma mater. Finally, ISB realized that it's worth it for calling me for some of these events. I've been waiting for quite some years now. I'm the one of the co-founders of MoneyTap. We've been in existence for over 5 years and operationally about 4 years. We are in the consumer lending space. We created a new category called the credit line product. We have credit cards in the market as well. And now we have a very exciting credit product linked with with the UPI rails. What we believe is that, a middle-class Indian customer, who's our target audience, by the way, not the elite or not the bottom of the pyramid. We go after the middle-class Indian For them, they need money to move up in life at various stages, right? So credit card penetration in India is still like under maybe 3%. So should be an easier way to access money and access credit 24/7, and hence a credit line product was born. We have done in our journey in the last 4 years, we have done about upwards of 4,500 crores of disbursement. We have our own NBFC license as well. Yeah, I think that's maybe a quick background about MoneyTech.
Sure. Thanks, Anuj. Welcome. Hi, Meghna. Can you please go next about your introduction?
Yeah, hi. Hi, everyone, and really nice to be a part of the TICON event. My name is Meghna Suryakumar, and I'm the founder and CEO of CreditWatch. CreditWatch is an AI-based platform that uses a lot of machine learning and deep learning technologies to curate risk intelligence and credit intelligence about businesses of all shapes and sizes. We work with leading financial institutions, companies, marketplaces, and other fintechs, and we help them in the entire life cycle of their credit. The speciality of CreditWatch is that we go after businesses that are what we call in the information dark space. So if there's 60 odd million entities in India, only 15% have access to credit because there's enough data about them for lenders to underwrite. CreditWatch focuses on bringing the remaining 45 million entities out into the digital space by building what we call thicker files. So we've built 60 million trust scores on businesses in India today, and we've created insights on loan portfolios worth more than 1 lakh crores till now. And we work with some of the largest financial institutions to some of the newest digital lenders, and we've been enabling them to be able to underwrite loans and reduce the NPAs and also be able to lend to segments that they couldn't earlier. That's what we do.
Great. Welcome. Thanks for the introductions. Now, quickly jumping into the topic. So firstly, let's discuss fintech. I would request you all to maybe go in turns and talk about what is fintech for you. It's a term which maybe some of our audience is not very familiar with. They've heard about it in the media and a lot of other channels, but not necessarily everyone understands it. So, and everyone's understanding can be different, and that's okay. So I would like you, maybe Meghna, do you want to go first on this? How do you interpret fintech? What is fintech for you?
So the finance industry is heavily regulated, right? So it's very difficult for banks and financial institutions to innovate and adopt to the latest change in technologies because as an institution they are heavily regulated, and for them to be internal change makers to adapt to the rapidly evolving ecosystem is tough. So fintech or tech fins, they're entities that help financial institutions gain these sorts of exponential gains by quickly aligning with them and partnering with them as an enabler at the back, so that they can do newer things, adopt newer technologies, perhaps look at newer customers and kind of scale exponentially in their own business. So that's one model of fintech. There's also the challenge of fintechs, right, where you have a traditional bank, but you can also have a new age bank that's only built on tech. So fintech can sometimes even be a challenger where they can actually displace and create lending business of which could replace a traditional business too. But in 80 to 85% of the cases, fintechs typically are key enablers that stand behind a regulated entity and help them get exponential gains.
Sure. Thank you. Very well explained. Anuj, how do you look at fintech and how do you describe that as a segment?
For many years, we called it the marriage between Bangalore and Mumbai. It's, the fin and the tech coming together. And, there are lots of other ways of, sometimes we like to call ourselves the tech fin, and, because we are technology first and then fin. But I guess, the reason why fintech is in news today for various different reasons, right? So, we are here, two of us here are doing in lending, and one of us is in payments, and then we have all the other flavors as well. But actually, fintech is very, very large, and you have to attribute it to what's happened with, the entire jam trinity, which is the Jan Dhan Yojana, the Aadhaar, and the mobile internet. In some ways, that's that's formed like the backbone of what we are seeing today, wherein technology can come and sort of, boost up financial transactions. And transactions could be all the way from payments to insurance to wealth to lending, all kinds of consumers, SMEs. So, when you have when you have access to via mobile phones and internet, when you have identity solved for, and then you have some stability in terms of a bank account where transaction can be housed by law, then I think that's what's given a huge amount of fillip to all the entrepreneurs who've come and done something or the other in fintech. So I guess that's what we think about fintech and how it's been evolving over the last few years at least.
Sure. Thank you. Gaurav, do you want to take on the same question and address it from your perspective?
So the tougher part is Meghna and Anuj covered large part of it. So I have to take a completely different takes. At least the way I see it in a plain simple word is, what fintechs are doing currently is, picking a particular segment and driving efficiencies in it. What it's leading to, one big change which has happened, which at least from our side, we believe is typically bank used to think from their own internal data trends and create products. What fintechs now are doing is thinking more from a customer perspective and challenging bank and working with banks to uh, create new products, which apart from efficiency, what it's also doing is it's also increasing the overall target segment. You take an example of UPI, you take an example of something what Anuj spoke about, unbankable, the population which has never got any lending, or something what Credit Watch also works on. If you look at it, there are close to 60 million SMBs and only 10-12% of them actually are eligible for any kind of lending. What about the rest 90? I think what fintech has done is it's come in and opened up the market, opened the eyes of the banks. There is more competition coming, though there's only one winner, which is customer, who gets better price, who gets better efficiency, who gets better tax around it. So I think over and all, I will define fintechs as change initiators for the market, if that's the term I can.
Sure. Thanks. So if I can try to give my gist to it, it's delivering financial services using technology, but thinking about technology and consumer first, or consumer first using technology to solve the problem and delivering financial services to them. And fintech was a term coined in early 80s by some Telegraph UK journalist, I believe. And then Jack Ma developed the term TechFin, where we talked about the tech first firms who now start to deliver financial services. Think about Amazon, which is a internet tech firm, now delivering technology services via Amazon Pay, for example. So so TechFin is also an interesting thing where they already, the internet firms and the tech firms have a massive consumer base. For them to use the technology which they are used to, knowing their customer very well, that they are already knowing, for them to deliver financial services if the regulatory environment becomes conducive, is very valuable and an obvious proposition. And so that's how I would define fintech, in which lending and payments are the largest segments, but then of course there are many more around them, from wealth to managing someone's day-to-day spends, etc. Okay, thanks for that. Now moving on, one of the challenges we see, or as an enabler, or probably as a challenge, is the regulation. So Anuj, if I can ask you to go first, how do you think about regulation, and talk about from your experiences, give some examples if you can, where regulation had become an enabler for you or where it has hurt your market segment? Because I do know and believe that it's done both many times to many businesses in many segments in fintech. So talk about regulation. How do you look at it? How is it an enabler for you, or as a catalyst, or it becomes a challenging hurdle for you?
Yeah. Listen, regulation generally comes in two shapes and forms, right? One is if you become very big as an industry, then regulation comes in. Ola taxi guys saw it when you saw other folks coming and protesting, and then e-commerce saw it in various different forms. So that's one way when you become very big. If Ola and Flipkart had not become that big, e-commerce is not that big, regulation would have not bothered with it. Right? That's one flavor of regulation. Second flavor of regulation is when there is genuinely some well-being involved of people, right? And finance is like that, be it payments, be it insurance, be it lending or whatever investments, because there is money involved, and there's however you put it, digitally or non-digitally, there is money that's moving from point A to point B, and whenever money moves point B, because that's what leads to all kinds of issues and much larger global issues. Nobody cares if like a shampoo bottle moves from point A to point B, but when money moves from point A to point B, everybody needs to know, because that is what will cause all kinds of problems, whether it's money laundering or whether it is large hurting people's well-being, wherein people have put their money saving in at the end of the day. So hence that's where you see regulation. Now, there's off this entire conversation around banks versus fintech, right? Will banks kill the fintech or vice versa? And my personal belief, and I think I speak for my entire company for that matter as well, is that I think it's not a it's going to be a joint relationship. It's not going to go away. One is not going to eat the other. And central to that argument is the piece on regulation, which is we will not get regulated like the way we think we can get regulated, because the regulator, in our case, the RBI, maybe in insurance, IRDA, it's very difficult for them to do it for every small person as well. But we get pseudo-regulated via the banks and NBFC that we work with. So regulation is not going to go away, and it is always going to be a way that you work with people. Right? I need to work with banks. I need to work with NBFCs. And we have seen that enough corporate fraud has happened, and it's littered. Our history is littered with corporate fraud at the highest level, where banks and etc. have been scammed by some businessmen. So regulation, unfortunately, was there, but they found a way to do it. So that's the reason why regulation does exist. So the way it has enabled us is that, like, we have our own NBFC license, right? So now I can, even if something happens, I can live peacefully, saying that if push comes to shove, I can use my NBFC license in the right manner and figure out what's the right way of doing it. If I am regulated, then it gives me access to other folks of maybe, whether it be talent, whether it be capital, most importantly, because suddenly people are looking at you and saying that, okay, you are regulated means you've gone through the basic checks and balances. It's like, you cross your JE and then you don't necessarily study in IIT, right? I mean, it's just a chapa that your boss have crossed JE, but you must be smart. Something like that, right? So that's the reason why the regulation sort of ends up helping you, because it gives you that stamp of approval that you are kosher, so I can scale with you. So you can become big, right? And then regulation anyway is going to hit you if you become big. But the way it does not help us is that, especially in the digital lending space, where as the industry, digital lending is not that big. At least over the last 4-5 years, it's going up. So we've not been under the purview, and till you don't become a certain size and scale, it does not matter. So you end up having a lot of bad apples in the industry, and that's happened in every industry. Happens in telecom, pharma, and those kind of things. And everybody does whatever the hell they feel like, and that's where it sort of hurts some of the good players also. So I guess that's where you end up seeing that the little bit of a not so good area of regulation, and nobody likes regulation. It just makes things slows things down, where you have to do paperwork, but it's a necessary thing if you want to scale. But when the absence of that, I think you end up becoming the wild west, where it sort of hurts more than it helps. That's where you end up seeing it. So hopefully that sort of answers some of your questions.
Yes, thanks. Gaurav, if I can go to you next. Comment on regulation as you prefer, but also talk a little bit about the challenges with the unpredictability of regulation, where it gets to be knee-jerk, if you have any examples or any thoughts around that. So if you can, don't worry, this is not recorded. There's no RBI guy watching this, so be yourself. It's as anonymous as your Bitcoin wallet.
I wish I had one, but I don't. Having said that, yeah, I think with payments, and especially being in cross-border payments, for us, we are heavily regulated, and it's not only about India, it's about across the world. And what it does is, Anuj briefly spoke about it. It's important. What it does is in payments, trust become really, really important. And if you're regulated and if you have the right licenses, you get that added advantage. Yes, it does come with more audits, more checks, but it also builds in that credibility. Uh, Other way to look at it, and that's at least within our organization, we look at it, the more complex the regulation, more complex the whole transaction is. That's where you actually build those product or solutions which will be difficult to replicate. So one way to look at it is it's an opportunity to build something which is difficult to replicate. I think, and I'm going to keep it short. One place where we believe that regulations at times can become, I will not say blockers, but at least I will say they slow us down, is what's happening is especially digitally, the things are moving so fast. The dynamics, the trade is becoming so different. Uh, if RBI or if some of the regulators don't change their policies accordingly, it becomes really, really difficult to. Uh, while the intention is to be, we want our customers to be completely compliant, but the model has changed so much that either that model can work or it can't be compliant. So at times you lose out on big opportunities. I can give you an example. Uh, there's a trend called as drop shipping, and it's been there for I think 5, 6, 7 years now. It's big in China. It's big in some of the Middle East markets, with the Turkey, Morocco. It's big in Europe, where somebody who's selling online on marketplaces or on Shopify stores, they just publish the goods on the website or the marketplaces, and they back order from China. So it never touches India for export. So in India, if you're an exporter, you need to balance out. You need to show that goods went out and the money came in. Otherwise, it becomes really, really difficult to explain where is the money come from. There is that regulation actually is impacting the whole industry a lot. So I think what's important is how quickly can regulations be updated by new uh, ways the business is being done. I think that's something which is slowing us down. I To be honest, I think the regulations are good. It also, to a very large extent, saves some of the businesses from ensuring that we don't get into transactions which are fraud, or it reduces our risk to a large extent. So from that perspective, they're not bad. But I think the speed at which they change is something which is questionable.
Yeah, so essentially, I guess you are hinting that they could be more progressive and more business friendly and not just slowly reacting to whatever happens. So, okay, makes sense. Meghna, do you have any views on the regulation? How do you look at it right now for your business and your industry, please?
Sure. From CreditWatch's perspective, because we're a technology enabler for the financial services industry, like Anuj rightly mentioned, we are almost pseudo regulated because especially because we deal with data and data intelligence. A lot of checks and balances with respect to information security and data protection that applies to the financial services industry ends up applying to us from a pseudo regulation perspective. So from day one, businesses like us, we need to understand that, when we're supporting customers who are heavily regulated, we cannot shy away from regulations. And we actually need to be proactive, to keeping our end customer in mind, to ensure that we have the checks and balances in place to be able to ensure. At CreditWatch, at least, we believe that we look at data governance and information security by design. While the PDP and the IDPR laws have not yet, been passed, ever since the GDPR has been passed, we've been kind of cognizant of designing our, systems in place to kind of ensure that, we have these checks and balances in place. While CreditWatch does not deal with data on personal data of individuals, we deal with data of businesses. Even to see if there's a slight overlap at any point of time, we have to put these checks and balances in place. So, from my perspective, I don't think we can shy away from regulation. I'm a lawyer in 2 countries, and I know that sometimes over-regulations can kill businesses. But at the same time, if we choose to do business with a heavily regulated entity, we have to, go with the flow.
Sure. Thanks. If I may add one interesting point around regulation. So to put this in perspective, and I clearly have no dog in this fight, Paytm took 7-8 years between 2009-10 to 2016-17 in building their merchant network, which became massive and highly valuable for them and got them what they deserved, probably. But UPI launch overnight while it's building the so-called Bharat's backend bone for payments between anyone to anyone, but they killed the Paytm business of payments, at which on which they were going to start charging at some point, and now it's worth nothing. And now many fintechs like that have to move into somewhere else to monetize the user base they have, justify the valuations they got, and get into probably things like lending. That's one of the very well known profitable business in the space, I guess. Okay, so that's what regulations can do for you as well. If it may be just timing, there are winners or losers with any change. So maybe you're just unlucky with that. Carrying on, let's talk about open banking. So open banking, neobanks, challenger banks, collaborating with banks or beating up banks, depending on what business you are in. How do you guys look at this? So if I may ask Gaurav to go first. So, where are bank your partners, or where are they your competitors, and how are the new age digital banks coming up, if you have any views on those things or specific to your business? And as well as last point, why do we need banks? Nobody wants to go to a bank's branch. If it's going to be an app only, then for me, it doesn't matter if it's a money tap or it's ICICI. It doesn't matter. It's the same thing. It's so do you have any views on this? Let's talk about neobank, open banking, challenger banks, partnering or collaborating or competing with banks, etc. While many of us do all the things together at the same time as well. So Gaurav, do you want to go first on this?
Sure. I can tell you one thing for sure. None of the panelists will say that they don't like open banking. Most of us love it. Okay. At least in India, it's not completely open. It's partly still pseudo-regulated. So it's not. If I have to define it in a plain, simple words, it gives an ability to an organization to pull in data, crunch those numbers, and create a product and come out with a lending score or whatever. Mm-hmm. The way what we saw initially, very clearly, we saw a lot of activity in B2C and B2C and C2C side. What we are now seeing is B2B, which is way bigger than whether it's P2P or P2C, right? You're talking about a couple of $1 trillion of business all put together. What we are seeing is couple of, banking as a service is something which is very interesting, at least from our perspective, where we see some of the players coming up with virtual collection accounts, building in reconciliation in it, then, using that data to build cards and build loan portfolio, and you add a flavor of cross-border payments to it. It's actually a virtual bank, and you may not want to go to a bank unless you are interested in for that also you have ATM, unless it's a large cash transaction you want to do. And again, going back to something which I said earlier, I think what open banking is doing is it's giving muscle to some of the fintechs to really crunch data, reduce the cost, increase the efficiency, and challenge banks. Will banks go? The answer is no. What it's doing is it's challenging bank. It's ensuring that banks partner with some of the fintechs. At the end, what you need to realize is large proportion of customers, bankable, profitable customers are still with banks. So they're not going to go away anytime soon, but it's going to do something really, really good for the customers in next 3 to 5 years, not only from a product perspective, but also from an experience perspective.
Okay, thanks. Meghna, do you want to go next and take on this question of the digital bank, open bank?
I think all of us, would agree that we would like open banking to kind of be from a partial mode to a full scale mode. Gaurav rightly pointed out, the opportunity right now in terms of B2B financing is really huge. And that's the area that CreditWatch is always focused on. And to be able to, what customers really need is they need money at the right point in time. right? If you're a business, do you want to get money the minute you get an order from your customer, or after you raise an invoice? And the ability to share information, share data, and for information exchange to happen, that becomes really crucial for you if you have to get money at the right place and time. And I think that's the role that open banking is going to play, especially with the AA regulations coming in. And if the AA model gets support from the banks, I don't think it's fully in support yet. But if banks start sharing data, and if banks open up, right, and if the pool is open, and if they start even sharing the CKYC data, which they haven't yet done, and that'll reduce costs in a big way. So all of this will kind of really, kick off a flow-based lending, right? And not just flow-based lending, but something beyond that is going to happen, because when you get all of this kind of data available for you to underwrite, there will be specialist organizations who will build value on top of that and help create these sort of risk analytics, that will help you really scale your lending and reduce your costs, and maybe even offer services of a new kind that you can't imagine. So open banking, I think, is really the key to kind of democratizing finance, right? And giving access to a larger pool set, which is concentrated right now. The lenders are a very small subset in Lower Parel and Belapur and Nariman Point. So to kind of go beyond that, democratizing finance and being able to access a larger pool, right? Open banking is kind of the way to go. So we're quite bullish about it.
Okay, thanks. Anuj, do you want to go next on the same question? What are your views on open banking and things around it?
Yeah, at least in India, and I'll maybe we can talk outside India in a bit, but at least in India, the open banking APIs are being provided by the banks themselves. So, hence they're not going anywhere, to Gaurav's point. And like in any other product, right, whether it was lending or any other product where they, like I said before, that it's going to be a partnership. Open banking, because the APIs are being provided by the banks themselves, it's going to continue to be a partnership model. Unlike in the UK, where Starling Bank got a license of their own, that's a little bit of a different thing. What Paytm did, they got a payments bank. So the government gave out payments bank licenses about some years back, but not everybody has taken them, right? Only a few of them have stayed on with them. Fino is one of them. Everybody else sort of gave up their license because there was no business model. They put a lot of restrictions on them, so they could not grow as much as they could. Right?
Correct.
But other than that, everybody is going to work with banks in any case. So, and it boils down to the fundamental thing. I'll do what I'm good at. You do what you are good at. So I bring in the experience, I bring in the technology, I bring in the people, I bring in the value proposition, you bring in the regulation, you bring in the capital. So that's going to be always the case. What's happening in Malaysia and Singapore and Indonesia is where they've given digital bank licenses. So now some guys are coming up. But in every country, they put some, the entry barrier is so high that you end up becoming like a conglomerate of sorts anyways, who will take it up. In India, for example, I will not be able to get a license for the simple reason that I'm just too small. But now that I have my NBFC license, I've proven at some scales, maybe I get a head up. Maybe I get one step ahead for somebody else who does not have that. Maybe, I don't know. Right? And we are about 5 years away. So we believe that this will be there. And, I think in the maybe 4 or 5 years, maybe RBI comes up with something like that, like it's happened in Southeast Asia. And we'll be hoping to stand in front of the line and say, give us this. Because see, we have 10 years of a history. So the open banking will continue, but the licensing actually will be given to anyways the big guys, like what's happening with the NUE for that matter. It's only going to the big guys, Reliance, Facebook, Google, Paytm, everybody's doing that. So for the small guys, I think they'll have to go through and prove themselves out. So it's not going anywhere. Across the globe, it's proven that the value that they can add at various levels, although regulations are very different, but whether you say Tinkoff in Russia, whether you call it or Upgrade in the US or Nubank or N26, everybody across the globe, Chime in the US, everybody's added. They've taken one portion of the entire piece, done some innovation around it, and then just called it banking because they've now added other services around it. So they'll always be, and they will keep innovating till some such time that the regulation allows them to have their own license, in which case then the banks will be really threatened.
Okay, thanks. Yeah, makes sense. And I think I'm unsure if RBI sandbox is allowing some of such things to be tested out by some early age fintech startups, but certainly the rules regulations are not not there yet in India for open banks
Absolutely.
yet, and the banks are not gonna share the data. If I may ask, based on your experience, how collaborative are banks in supporting the startups versus being the usual bureaucratic, slow, never responding kind of
Yeah.
organizations? I'll share one experience before you start. I sat with CTO of one of the large Indian private banks, and it was 2 years ago, not too long ago. And when I started talking some stuff on APIs, the question was, "What is an API?" And I was just, I was just amazed, how anything would ever work here. But nevertheless, your experience working with banks, do you see them as responsive, progressive, or not so much, or it has to be regulated, otherwise they won't do it? What's your experience?
Yeah, my experience is that, even folks in the public sector bank unit, national public sector bank units, understand this very well.
Yeah,
There is a difference between implementation and intention. So
correct.
the CTOs, the CIOs, the CPOs, or all the C-suite guys, all of them understand this. There's so much of literature being written about it, and everything that they read has fintech, disruption, open. So they all understand it, right? And I think they all have the right kind of intent, and they're super smart guys. It's not that they don't understand it. Folks like RBL, IndusInd, Yes Bank, Federal, these guys have taken the a lead and actually gone ahead and created APIs and are actually, they call, at least we partner with RBL Bank, and they call themselves as partner ka bank, right?
Hmm.
So a lot of these guys have, everybody's watching them and saying, hey, what are you doing differently? So I don't think anybody now questions what technology is, what partnership is, what fintech is, what APIs are, what we can do, what blockchain is. Everybody understands it. Everybody's knowledgeable about it. Now there is a challenge between what you want to do and how you implement and how much time you take, and everybody is following their own cycles. Uh, just in these 5 years, we see so much of change that's happened over the last 5 years. It's incredible. For our credit line product, where we just couldn't get it to get implemented 5 years back, now everybody has the stack to implement it. Right? The credit lines, a product did not exist for customers like you and me. It had some variations of it at the back end, but not like the way it's like a seamless product. Now everybody has it in some ways or the other.
Hmm.
So, and even public sector banks, right? They all understand it. They're the smartest guys at the top. You talk to, they are in every conference. They're being pitched by all the BCGs and the McKinseys of the world. So they all understand all of this. I guess it's just a matter of implementation, and that will happen at its own time.
Right. Okay. Meghna, do you have any views on this? Working with banks, challenges, or good journey, or any experiences you want to share here?
Sure. I mean, we've had an extremely positive experience. When CreditWatch set up, within 3 months, we partnered with Barclays through the accelerator program, and our first use case was essentially funded by that. Our first pilot was funded by being a part of the accelerator. Right, we got to see the workings of a global bank, and right at the same time, we signed up with Capital Float, we signed up with RBL Bank. And we signed up with 20, 30 financial institutions in the matter of 3 to 4 years, and we work with all of them very closely on their core functions, which is credit and risk. So our journey has been very positive because we've always been in a collaborative and partnership mode with the banks. And just like Anush pointed out, they're extremely smart people on the top, whether it's a PSU or a private bank or an international bank. So what we really spent really time focusing on is understanding the customer. And like, there are challenges, right? Implementation takes time. So we really focus on working on those challenges, but on a very collaborative mode. So in terms of the kind of implementations that we have with the banks right now, we're going live with a large private bank where they're adopting to a machine learn model, which is going to be used to evaluate the entire portfolio of commercial loans, replacing a 10-year-old model that they had, which had 90% accuracy, but our model threw out 98%, and the bank agreed to use it. So this kind of shift is coming in, and it just takes time and patience. But our experience overall has been extremely positive. I keep telling entrepreneurs that the Indian fintech ecosystem per se is one of the best in the world. You can't get the kind of support that you get and collaboration anywhere else, right? The kind of access that we have to banks here, if you had to do this in another country, probably you'd end up getting one or two banks. But every fintech, is working with 10 banks, 20 banks. The kind of openness that is there, just we're in a world-class ecosystem, and we should, really make full use of that.
Great. Thanks. Gaurav, do you have any views on working with banks? Positive, negative, anything you want to share? Or
I mean, you can't live with them without them. But that's on a lighter note. But if you look at banks in India, they're pretty tech savvy. At least, I mean, since we work in cross border in multiple countries. I mean, imagine a UPI in US is still not there. It's not there
Of
in
course.
you name it. Most of these, I mean, the things you hear, the kind of the technology which is already there in the market, it's, I mean, some of the really advanced nations are at least 5 years behind that. So from that perspective, I think a lot of Indian banks are already very tech savvy. If you would ask me this question 4 5 years ago, maybe things were different, but now very clearly what banks have realized is that some of these fintechs actually bring in a lot of value. It helps them accelerate growth. It helps them bring their cost of acquisition pretty low. It helps them save money. It helps them reduce their NPAs and a lot of those stuff. So from that perspective, very clearly, from an intent perspective, I mean, you'll always have banks will be willing to work with you. It's just that with banks, it takes a little longer. That's also more of a legacy of there's AVP, VP, and senior VP, and a lot of those people, and it becomes difficult at times to figure out who is the right decision maker there. But having said that, once that call is taken, we've seen banks working very quickly with us. So, we are happy with. We work with multiple banks, and we are pretty happy with most of them.
Great. Okay. That's helpful. Niharika, Chintan, quick shout out for you. In case any audience have any questions, you can please start posing them and flow them through our chat so I can keep taking them. Okay. Thanks. We'll continue. So Gaurav, staying on with you, since you're very happy with your current bank partners, have you ever thought of using Bitcoin for your cross-border payments? That's probably one of the only real use cases I see of Bitcoin, while there is a lot of hype and bubble about rest of it. So has your firm evaluated it, ever looked at it, care for it, any views on it?
Sure. So upfront, our firm, at least our organization doesn't support it. Again, the reasons are that there are multiple regulators we work with, and regulators don't like Bitcoin. And if you don't know if the from A to B, where A has got money and money is moved to B, and I don't know who B is, it becomes a transaction which on a cross-border space can become really tricky. So from that perspective, as an organization, we've stayed away from it. But having said that, the technology behind it, the blockchain, and a lot of those things are very interesting. As long as there is a sane use case for it, and there is a use case which can actually help us as an organization to bring in more transparency or fasten the process or reduce some of our risk, we'll be happy to do that. And we evaluate technologies, but from Bitcoin or any other cryptocurrency, we've stayed away from it. I will not say never, but looks highly unlikely as of.
Okay, fair. I think you said it well that probably Bitcoin is still a hammer searching for the nails. Rather than starting with, I want to use Bitcoin, now tell me what the problem is. You are very, focused on sanity and saying, let's figure out the problem and see if there is any solution. And in that, maybe Bitcoin or blockchain play a role. If not, they don't. So that's a right way where most of the firms are not going, unfortunately. Okay, if I can move to you, Meghna, and ask you a question about what does it mean for lack of business or credit ratings for SMEs? That's one of the problems you're solving. So talk a bit more about it, how it helps the industry, how it helps the overall ecosystem.
Sure. So, I mean, I talked about the landscape in India, right? We have 60 million businesses. Out of them, 15% of them have access to credit, and the remaining 85% don't. In this 15% who actually have access to credit, 98% of them would have access to credit because of the mortgage of a real property, right? Or there are usually secured loans, they're not unsecured loans, especially to small businesses. So, the problem statement that we want to solve is if we could create data as an asset, right? Instead of giving your real property as a lien for a loan, if we can actually create enough data and insights about you so that the lender can trust you, and that becomes the collateral against which you can get a loan on, right? That I think would be a game changer in terms of, really tapping into that $1 trillion that everyone's talking about in terms of underbanked, the opportunity for underbanked businesses. So CreditWatch's mission has always been to create unique insights about businesses, especially using the power of alternative data, and to also look at different ways, right? If you look at, let's say, credit rating that exists in India today, there's a great SME gets, triple B plus, and a not so great gets triple B minus. So what is really triple B plus, triple B minus? Why can't a great SME get like a triple A? It wouldn't, right? No matter how great it is. So from that perspective, that's been the real problem, that out of the, where you're really able to validate an entity from an, external third party, it's only 4% of the total businesses that are there in your country, and 96% don't have that validation. And unfortunately for a bank, when it has so many things to do, it's not really scalable for them to kind of do this internally, where they will create these unique scores, right? They need a partner. So like what FICO did to the mortgage industry in the US, right? The FICO score, which was an alternative score, really catapulted the mortgage industry in the US to the next level. These sorts of alternative data scoring models, AI-based underwriting, reducing NPA using risk, all of these technologies are really going to catapult the opportunity for all the people in the lending industry to be able to really, really penetrate into the 1 trillion, right? And that's our theory.
Great. Makes sense. If we can switch gears, Anuj, I have a question for you. Can you, for those people who are interested in digital lending, can you try and break down the digital lending market into a few segments? For example, I understand you are into the consumer lending business. There are payday loans. There are many other different kinds of loans. So what all is there? What are the challenges in each market? What is, high growth, high risk, low risk, etc. If you can sort of segment whatever you can for us, it would be useful for our audience to understand, and for me as well. I'm really keen.
It's got a lot of nuance. You're asking me for everything, but I'll try and keep it a little bit
Sure.
broad, so that otherwise you get lost. So I will segments consumer and SME. So I'll keep SME aside.
Okay.
Then within consumer there is secured and unsecured. So I'll keep secured aside.
Okay.
The entire digital lending is happening in the entire unsecured market. So that is the larger piece. The secured one is a home loan or a vehicle loan, which is a completely different market or such. In the unsecured consumer side, typically there are about 4 or 5 models. One is what banks and NBFC do directly. Then there is one large model of what is now being called BNPL, which is the latest craze, although Bajaj has been doing it for 30 years. So there's an entire consumer finance, or call it whatever. Now you call it buy now, pay later. So there's some online guys, some offline guys, wherein you purchase something and you finance that. The third category is where you do P2P, which is essentially I lend to you as a person. So there's a platform in between, wherein you can, I can lend money to you as a person. So now the unfortunate part of that is that because there's no security, I mean, who guarantees me money back? So the interest rates tend to be higher. So it depends on what your need is. The fourth category essentially is, marketplaces, which is like Bank Bazaar, Paisa Bazaar, India Lens, which are probably lead generators, where they're working with banks and NBFCs at the back, where they're just taking the customer deal and passing them on. And what we created as category is of credit line, which now seems to be a lot of people have launched that product over the last couple of years, wherein you get a line of credit as a customer and then you can withdraw it multiple times. So that is it's money available to you 24/7. You can take it out whenever you want to. So banks and NBFC, which do pure PL one time, they'll transfer 5 lakh rupees. BNPL, which is what Bajaj does, or consumer financing, P2P, marketplaces, and credit lines. So this is broadly the consumer secured, unsecured market. Sorry. And then of course there is the entire secured market, which has got, home loans and car loans and vehicle loans and gold loan and the like. And then there's the entire vertical of SME, which I actually, I can go through that as well, but that probably is just too much.
Sure. Okay, that's very helpful. And in this unsecured market, how do you choose to be in the segment you're in?
You know, 5 years back, when we were trying to do research about what this product could be, loans already existed, right? And then we realized that everybody wanted money, but they did not want like 2 lakh, 3 lakh rupees every time. Yes, there is a market for that as well. Of course, and there's a very large market for that matter. But the guys who end up needing 3, 4, 5 lakhs are slightly more on the elite side. It's slightly like people who have income of 75,000 and plus, right? But the guy who's earning a 30,000 rupee, 25,000 rupee income or a 10,000 rupee income, that guy does not want like 2 lakh, 3 lakh. He wants 5,000, 10,000, 15,000, 30,000. Now for 10,000 rupees, you're not going to go to HDFC Bank and stand in a line, let go of your leave for one day, those papers, reams and reams of paper, and then you get it because that guy says, man, for a bank, the cost center does not add up, right? I mean, the margins don't add up where I can service a 10,000. I can only give you 5 lakhs. Otherwise, please walk away. I have some other client to go to. Couple that with all that's happening with mobile internet and app and experience-led work and technology. And add to that the fact that today everything else, at least 5 years back also, was that everything is available on the tap of a phone, right? So I want a cab, I want groceries, I want movie tickets. And if I don't use it, I don't want to pay for it kind of stuff. So it should be available to me 24/7. So we start putting these pieces together, we realize that credit line as a value proposition really stuck. When you give a customer a lakh of rupees, he can take it out today, tomorrow, day after tomorrow, 3 months later, 3 years later, doesn't matter. And then you're taking out only 5,000, 10,000, 30,000, 40,000, 1 lakh, whatever you want. So pay interest only on that amount that you're using. Obviously, it was not so straightforward like I'm telling you, and it was done over time.
Of course.
But yeah, I mean, that was the genesis of how we came about and entered this market.
Okay, thanks. Thanks for that. Chintan, Niharika, I'm hoping there is some audience watching and these 3 panelists are not just answering my queries. I hope there are. If there are any questions, please pass them on. Otherwise, we'll just carry on. I have a question for, again, Anuj, this might come on you because, or Gaurav and Meghna, anyone can answer, please. The question is, so RBI has come up with some lending rules, or they are coming up in the next few months, as they keep stating, at least in some press conferences, they're coming up with some digital lending rules evolution, right? So they're trying to define a framework or make it more prescriptive / predictables, etc. At the same time, recently, when RBI banned some of the NBFCs and some of the other lending apps because of the bad apples example Anuj you gave earlier, Google Play also banned a lot of apps who were not banned by RBI necessarily. What do you guys think of having Google Play as another regulator, or let's say Apple as another regulator, on top of the RBI that we have to deal with anyways?
Gaurav, Meghna, you guys want to go first?
I mean, what I can tell you is the reason Google did that because they got a notice from the RBI.
Okay. So, but
it's not because of anything else.
So RBI would have sent them a notice that if anything,
called upon by RBI. So the reason for this ban was because they got notified by the regulator.
No. So the point is different. Look, RBI banned some apps themselves, I believe. Did they ask Google Pay prescriptively to ban these apps, or did they say that, okay, follow your RBI did not tell them the apps to ban, right?
But RBI wouldn't know what all apps to ban, right? These are the ones that come to the notice. So then they would go after the Play stores where these all the apps are hosted and tell them that, these are, if you find, apps that kind of violate these kind of simple rules that, the guidelines that are coming up with, I think one version of that is already out. And based on that, the bans were done.
Okay.
I'm just adding to what Meghna said. So you need to understand, while this thing has come up, Google and Apple have always been very choosy on the apps that can come on their respective platforms, right? And they have a system where customers can give feedback. There are rating systems, so it's like a marketplace. At times, they would, and especially when there is a heat from regulator, they would want to be on the right side of the law and clean up those bad apples if they have. So I think that it's not that all of us have tried to become a regulator. They've always had certain guidelines which an app needs to maintain on their platform.
Okay. Anuj, anything to add here?
Yeah, I think you know, I'm probably not very appreciative of them acting as regulator, which they do. And I understand why they do it. And in fact, I've been in talks with some of their guys informally and asking them to, give us a voice to their policy team. I'm part of the Digital Lenders Association of India, wherein we are asking them to give us a voice to say that let us help you, right? Because they don't understand the nuance. And then, like Meghna rightly put it, like they were given some rules, and then they just applied the rules. So they were right about that, but they also went in and applied the rules in a very broad brush manner. That's what I object to, right? I don't think I object to the fact that they're selective. I think that's right, like Gaurav mentioned. But when the rules come in, they don't. Somebody sitting in the US is not going to have the nuance here. So let me give you an example. They're talking about the right thing that they did was ban people who were having tenures less than say 120 days or 90 days, right? That is what
Correct.
trading lending does, and across the globe that's causes all kinds of problems. Also, the ones that cause a recent amount of problems that we have. Right call. So they banned a few apps. Everybody else found a way to do it. They advertise 120 days, and when you open the app, you say, now you're not approved, I'll give you to 12 days instead of 120 days. So they found a way out of it. What can they do? Because they cannot do manually, right? Now there'll be something what they did not do. Now they're talking about people, and they've not done it for us or whatever else, but they're giving this rule that people who are taking location, you should not have that, right? Now, if the customer through his own consent is giving location, right? Now, let me explain to you why this is important. In the previous avatar where of no digital work was there, somebody used to come to your house. How is a random feet on street guy coming to my house safer than me picking a pin drop on that guy customer who's giving this to me on her own consent?
Correct.
Every guy, I don't know how many people in Swiggy, Amazon, Flipkart, Zomato know my home and office addresses, right? Purely because of the pins and the come. So that's allowed there, but in lending, it's not allowed. So this is the nuance that nobody understands. And this
Correct.
is where Google, I think, is not being able to make a judge, and unfortunately, they can't do it manually. This is what I object to, this kind of nuance. So the only way forward is to have, sorry, dialogues with people, figure out what's the right way of doing it, and then coming up with a nuance. Maybe they don't have a technology answer, and that's fine, but at least have that conversation. So, there's never a right or a wrong answer. I guess there's a little bit of a gray everywhere in between.
Got it. Thanks. Okay. So I will ask just one last question. I'm conscious of the time. There are no questions related to me from the audience. I guess I hope they are there, but maybe just somehow messages are not coming through. So one last question is for all of you. You can go one by one, maybe Gaurav, Meghna, and then Anuj, if you don't mind. The question is, imagine for the wannabe entrepreneurs in the Tycoon audience today. So there are a lot of people who want to be an entrepreneur. They're attracted by fintech due to the size, the scale, the level of disruption, the opportunity that they can go after. Any advice for those entrepreneurs? How should they look at the market? How should they proceed? How should they sort of form their startup journey planning in the early stages? So Gaurav, do you want to go first, please? In the fintech space, fintech wannabe entrepreneurs, what is the advice you got? A few pointers.
You're asking me to preach something which I haven't done, but
that's okay. That's why I'm starting with you. It might apply to you. You may listen to yourself and get attracted, right? I'm not sure who else is listening to us right now.
I have only two or three principles. One is the problem real? Is the opportunity big enough? And is there an entry exit value? These are the three principles I would look into if I ever get into a startup from a fintech perspective.
So, got it. Okay, that's good. Thanks, Gaurav. Meghna, do you want to go next?
Advice to young entrepreneurs is, you should always focus on the problem that you're solving, and customer obsession is really important. And, the solutions keep changing along the way as long as your focus is on the core problem that you're solving. And in terms of, what's always worked for CreditWatch is customer obsession, right? And something what we call breakthrough simplicity, which means that you can do really things in a very simple, effective manner without overcomplicating it, because ultimately, that's what kind of sets you apart. So these are two things that I would focus on.
Great. Thank you. Anuj, any last piece of advice from you?
Yeah, completely agree with both Gaurav and Meghna. So don't repeat that. I agree on all of that. One thing that I found as I've spoken to a lot, and there was a little bit of personal journey as well there, is that it does not necessarily work where people end up doing it as part-time. So I know that's the toughest thing to do, which is the leap. But it's okay to do it a little bit till you flesh it out a little bit here and there, so to understand, so that you're not completely and solve for some of the problems that both Gaurav and Meghna spoke about. But once you have a basic inkling, your chance of success is just, it increases by some exponential amount just by you quitting everything and jumping it head on. Even if it does not work, you can always come back to your job, and people will reward you for the experience, even if it's for 6 months or a year. People forget that today people who have got that kind of experience are rewarded more than not, for that matter. So it doesn't matter whether you do well or don't do well, but 100% if you don't do it full time, you will not do well. I'm pretty certain about that. So that's probably one advice I'll give.
Sure, that's very helpful. And to the audience, I will just add one more piece of advice. Do it for the right reasons. Don't do it because you heard us on the panel. Don't do it because you saw $1 billion valuation. Funding is not a sign of success. Don't do it for any other reason. But if you're truly motivated from your own inner voice, you're likely to be able to persevere for longer. Have the right motivation. Do it for the right reasons. Reasons could be anything. You want to learn, you want to change the world, you want to disrupt, you want to do something. But follow your heart. Don't do it just because someone else is making money in it. That's not what really makes it work. Okay, if you do it for the right reasons, your consciousness would hopefully drive your journey very well. So that's it, guys. It's been a real pleasure. Gaurav, Anuj, Meghna, thanks a lot. I think we are in time. We should finish in time. Nobody has given me any prompter or cue to continue or not. So, but I assume it's 6:15. So I think we have to get back to our day lives. So thanks a lot. Thanks for your time. Hopefully we'll be in touch, and really real pleasure speaking with you. Thank you.
Thank you.
Thanks, guys. Thank you. Bye.